It's about that time of day again, folks. Welcome back. Welcome back. Joseph James here from School of Trade. I've got Marty Errico here from Traders Audio. It's time for your crude oil morning prep. We're moving from the screen to the floor this morning. I'm here in Los Angeles in a comfortable home office, in a nice comfortable chair in front of my computer screens. And, of course, I got Marty Errico braving the elements with his feet on the ground at the NYMEX Exchange in New York City. We're going from left to right coast. We're going from screen to floor. Again, I'm from School of Trade. Marty's from Traders Audio. And this morning, I'm going to provide a technical analysis top-down approach, which is going to mean we're going to begin with daily charts, move all the way down to hourly, and of course, all the way down to minute charts. And I'm going to look at the overnight session and the London trading session, trying to anticipate direction at the open. The London trading session gives us a lot of clues, and we're going to use this top-down approach to set the picture up, right? Set the stage, paint the picture, and then look what happened overnight. Look what happened in London so we can anticipate direction at the open. My job this morning is to identify high percentage trading opportunities beginning at 8 a.m. Eastern Time. And once I'm done looking over my charts and hopefully giving you guys some direction here this morning, I'm then going to turn it over to Marty Errico. He's on the floor of the NYMEX Exchange, and he's going to provide us with some very unique and very effective analysis directly from the pit. So we're going to hear from Marty in just a few moments. In the meantime, you got to deal with me here for a few seconds here to begin. Let's jump right into it. Like I said earlier, we're going to take a top-down approach to this. This is a technical analysis approach, which means I'm only looking at charts this morning. Now, the first thing I do want to make sure we remember this morning is today's a Wednesday. So Wednesdays mean crude oil inventories. We have economic news coming out this morning at 10:30 a.m. Eastern Time. So we know that on a Wednesday morning, a lot of the things that we're talking about right now can easily change. If this news comes out unexpectedly at 10:30, it can really shake things up. So just be aware that as I go through this technical approach this morning, the daily chart's probably not going to change very much. But as we get down into the minute charts, you're going to notice there are going to be some variables here today, such as the news at 10:30. So let's jump right into it. Daily chart. First thing we see in the daily chart is a huge clue. Now, you might be looking at this and going, it looks the same as it did yesterday. Well, it did, but look closely. Let's zoom on down onto this daily chart. And I want to look specifically at the last 4 daily candles. Look what we have here. We have the last 4 daily candles. That will be last Friday, Monday, Tuesday, and now Wednesday. And what do we see? A whole bunch of dojis, right? We got big wicks, top and bottom, with the exception of that one engulfing candle that occurred on Monday. We really have seen sideways trading ranges, two-sided trading, indecisive, right, bouncing off lows, failing at highs. Pretty much rewind the tape. Yesterday's broadcast, we talked about that two-sided trading, and boy, if you traded it two-sided yesterday morning along with us, you really made some great capital on crude oil yesterday. So we see another big, big clue. Doji, 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 inside candlesticks, sideways trading range. This daily chart may be all we need here today. Let's take a look a little bit further. That was the daily. Now let's zoom in on a 4-hour chart. The 4-hour chart, in my humble opinion, is a very good blend between a daily chart and a minute chart, right? 4-hour chart to 240-minute. It's going to give me enough information to see the big picture, but at the same time, I'm also going to get a chance to see some of the details and some of the wisdom that comes out of these candlesticks. What do we see here? Well, this, of course, reinforces what we saw on the daily chart. You can see here now, we have tested the 97.01. We've grinded our way lower, resting into that trigger zone, and now you can see just kind of sitting here trading flat. This clearly flat moving averages. No higher highs, no lower lows. Very, very easy to see this sideways range is just reconfirmed on the 4-hour. Well, certainly this can't continue. Let's keep moving down. Let's go to the 60-minute. The 60-minute chart, doesn't look much better on the 60-minute. As you can see, we've got these wild swings that came in about 10 o'clock yesterday morning. Remember we talked about that brand new JOLTS report on the news broadcast? Marty and Jeffrey were talking about on the Traders Audio broadcast yesterday. That JOLTS report, we were joking around in the trade room yesterday talking about the fact, remember that old Jolt Cola? Well, it's what it felt like the market did yesterday. That's about all we got out of the market yesterday was that jolt from the news at 10 o'clock. Other than that, though, you can clearly see the big wicks at the top, the big wicks at the bottom. This just tells me that they could not sustain higher highs. They could not sustain lower lows. This is a classic case of the market being in balance. If we have any market profile theorists out there, this would be where we are trading inside the value area from the previous day, right on top of that previous point of control, right? So we have obviously sideways trading, flat trading. Buyers aren't in control. Sellers aren't in control. We can see the short-term price wedge. Most importantly, we can see this easy to define trading range between the 95.99 and 95.39. Now, we used this trading range yesterday to make a killing. Can we do it again today? Tough to tell. We're going to have to wait and see what happens here this morning. As we go to the 30-minute, you'll notice much of the same. 30-minute charts are looking exactly the same. 95.99, 95.39. Those are my numbers here this morning, guys. 95.39 and 95.99. Those are my levels. I'm looking to buy those buy zones, looking to sell those sell zones. Relatively easy prep work this morning. Avoid the middle, buy those 95.39s, sell those 95.99s. Now, I want to remind you guys, the way this works is that as we narrow down into this wedge, right? As we start to narrow down, you know what's going to happen. We're going to get a breakout, right? This breakout is going to occur. It's not an if, it's a when. The breakout might occur before the news today. The breakout might occur after the news today. Very difficult to tell right now. One thing we do know, though, is the breakout's coming. So just like knowing there's a quiz tomorrow morning on the school, right, in science class, there's going to be a quiz today, and crude oil is going to throw the quiz at you, and we need to be ready for it. So let's think about this. What are three directions that crude price action can trade this morning? It can trade sideways, sitting on hands. It can trade higher, looking for a price reversal and a short. It can trade lower, looking for a price reversal and a long. So we know that if price trades sideways here going into the open, we know we're sitting on hands. Buying lows, selling highs, that's the goal. But if we trade sideways right in the middle, we're sitting on hands. If we jump up, remember, we are not predicting. Predicting is for rookies, right? We got to react. We're going to wait for price to test the sell zone, wait for it to collapse out of that sell zone, and we're getting short. Price moves lower into the buy zone. We wait for it to test the buy zone. Once it rises back higher, I'm getting long. We have specific calculations that allow us to define these buy and sell zones. I'm not trying to predict. I don't know if we're going to blow through one buy zone down to another one. I got to wait for it to react. Once it reacts, I'm buying it right back up. So again, whether it goes higher or lower, no matter where it runs to, I'm going to wait for it to stall out, wait for it to reverse, and then I got it, right? So do not try to predict. We do not know how far this breakout will go. All we know is once that breakout begins to stall and we see the reversal, that's when I'm getting ready to take that counter trend trade. We got one more chart here, folks, and then we're heading back to the NYMEX with Marty. Here's my VIP chart. We call this the VIP chart for the very important price levels every morning. This is a chart that has very few indicators on it. It's a 5-minute chart, and I use it just for price action, right? Just to see what's going on. Most importantly today, I'm going to use this to analyze London. Now, the first thing we see here this morning is we are directly in the middle of this range, as if we needed any more reasons to call this a sideways, two-sided trading morning. The daily chart showed us this, the 4-hour, the 60-minute, the 30-minute, and now we're all the way down to my 5-minute chart, and we can still see much of the same. This is a huge clue now. What's my plan? Plan is pretty simple, guys. Since I'm right in the middle of this market, right, so I'm right in the middle of London's trading session, I'm not going anywhere near trading right now. What I have to do is stay patient and wait for price to test the highs. I will sell London's highs. I will buy London's lows. Again, going right along with that two-sided trading, going right along with that range-bound market. And of course, don't forget, we're also looking for fake-out breakouts. If price moves higher, we go into the London reversal zone. I'll wait for it to break back in. When it breaks back in, I've got those buyers beat. Same thing to the downside. We go into the London reversal zone. I'm going to wait for price to reverse. Once it heads back in, I've got those sellers beat. Looking for fake out breakouts. We do know now that we have a full breakout with a close above 96.18. 96.18. That's my line in the sand here today. If we close above it, I'm getting long. I have a short-term target of 96.24 to the upside. So that's my number right there, 96.24. I am looking for a close above the 272, that 96.18. But I want to see prices moving above 96.24. That's where I expect to see the reversal if it's going to happen. 96.24. It happened the exact same way yesterday. I'm expecting to see the reversal at 96.24 this morning. If it gets above it, that's when I'm bullish, and I'm going to be off to the buy side. So I am bearish here until we get and close above 96.24. Everything else, I'm expecting fake out breakouts. Again, I might be wrong. This thing may take off to the upside, and if it does, we get a close above 96.24, I'm going to be bullish right along with the rest of the buyers. I'm going to be buying along with them. Same thing's true to the downside. I have 95.04. 95.04 is the bottom of that London reversal zone. Again, I'm going to be bullish until we close below the 04. I also have a projection below at 94.98. 94.98. We have a lot of support down here. I've got 94.98, 94.90. I'm going to be bullish until we literally get below, boy, it's going to be 94.79. There is not a lot of room here. We've got London support, symmetry support, and I've got my Fibonacci support. As you can see, in a two-sided day, this looks a little bit like suicide, right? Trying to sell into this support. So I'm buying the London support. I'm buying the symmetry support, and I'm buying the London fib support. We get a close below that 94.79. Now those sellers have my attention. 94.79. So just to wrap up here, guys, I am buying at lows, selling at highs. I am bullish all the way down to 94.79. I am bearish all the way up to 96.24. Those numbers were 94.79, 96.24. You got my numbers for today. Now all we're going to do is sit back and let the market come to us. Remember, we don't predict, we only react, and don't forget to set your alarm clock this morning, 10:15, 15 minutes before that 10:30 news comes out so we don't get run over by the inventory report. That's it from my end. I'm going to send it back over to Marty here. He's braving the elements on the NYMEX exchange this morning, and he's going to talk more about what he's seeing directly from the floor. Marty, take it from here, my friend.
All righty. All righty. Good morning to you, JJ. All right. Let's start them off here by talking about API numbers from last night. First and foremost, we had American Petroleum Institution. They hit the board with their API numbers. And the interesting thing that we saw was, you know, crude shows a very, very, very not small build, but not as big as we were thinking, right? 680,000 barrel build. In gasoline, they show 186,000 barrel draw. In distillates, they show a 1.1 million barrel build. And Cushing, Oklahoma, was a 646,000 barrel draw. So kind of even on the front of crude oil, and you can see really in the overnight session what happened to crude, and really nothing too crazy. I mean, we guess, don't get me wrong, we had our London range, but you can see pretty much sideways from yesterday's settle. We didn't really breach any major levels here above or below the settle from yesterday. So you can kind of see no big, huge reaction from our API numbers. So right now here we find ourselves trading 95.69 right now. We are really just kind of unchanged virtually from yesterday's settle price. And I have a high from, well, first we'll go over levels later, of course, but I have a settle number of 95.62 from yesterday. So just so you know, we're all on the same page here. We're looking at very, very similar levels. All right. So let's just real quickly, let's talk about risk on, risk off sentiment. Let's take a look at that dollar here so far this morning. Dollar, man, oh man, oh man, this dollar has been really kind of not cooperating with us last couple days. And we've been watching just risk on sentiment still flow into this market right now. I have your dollar lower on the on the morning so far. Have your dollar trading 82.17 last print. Again, we have been just watching just a little bit of a downtick in the overnight in the London session on your dollar. So again, I would definitely call it a risk-on sentiment for, as we watch crude just really trade sideways in a, what did I say, a couple ticks positive, or 8 ticks positive from the settle from yesterday. So it is still risk-on sentiment, just I don't know how strong it will be. Again, we looked at those API numbers and we kind of concluded that there wasn't really much action out of those API numbers. So we'll have to definitely keep an eye on that. All right, so continuing on here. I'm also going to take a look at your bonds. I'm also going to take a look at your other currency markets real quick just to give you guys a risk-on or risk-off sentiment here. So again, like I mentioned here, your dollar down by 82.16. Okay, euro 131.28 up 40 cents on the day, 40 points on the day. Your dollar's down about 40 points on the day as well. So again, that's definitely risk-on. The dollar DXE negative 40, euro up 40. So that's quite firm. And so your bonds as well, just giving us that little bit of a light offer in the bonds, again down 5/32 for 146.03, and your LIBOR as well just down as well. So again, we can call it risk-on sentiment. Now let's just focus more on energy products and crude alone. So now we have your crude Brent WTI spread. We have Brent crude holding levels below 105, which is very bearish. Again, once we fell below 105 in the overnight session, look where we are now. We're 103.82. So again, Brent crude keeps on falling, and I really kind of got to see if crude can hold these levels above the 95. Really, it's all about that 95.50 from yesterday. We were even talking about, I think we could get a little bit higher, but we have to see what happens with this number. This is a huge variable in the market. So let's now talk about Brent WTI spread, or Brent crude, as I mentioned, 103.82. Brent WTI spread, listen to this, guys, $8.81, I believe I have on that Brent WTI spread. Yeah, $8.11 now. That's huge, huge, huge contingency in the price. We are in contango now on that spread, and that's in contango by about 70 cents or so. Big, big time contingency. That should shoot crude higher. We should see crude trade a little bit higher. Calendar spreads right now are pretty tight as well. June, July is just about 22 cents. I have the June to August just about, let's see, 19 cents, and the June to Sep no more than 9 cents. So again, you can see very tight on these spreads, which is going to cause crude to possibly trade higher. Crack and swaps trade 90.013s here, so that could give us that little bit of a boost. Okay, biggest trades in the pit yesterday. They show up the upside. They buy basically 150.95. 1,595 half calls, spreads up to 97 half. They buy the 95 call again. That was still yet it's been the trade of the day for the last 3 days. It's been the trade of the day again yesterday. So that 95 even call, 95 half to 97 half straddle / call spread, that traded over 1,000 times, along with the actual 95 call. That traded over 1,000 times as well in the pit. We saw a little bit of downside also kind of get shared up here. So they have the upside covered from 95 to 97, as I just mentioned now. They have also the downside, of course, covered. We had the 94 to 93 put spread come into play about 700 times, and then we saw the 93 put, believe it or not, over 1,000 times. 94 half put over 700 times, and 93 put even, 94 put even over 700 times as well. So you can see not as much energy associated with the trade, but there's more energy to the upside, more trades here pointing higher. All right. Right now I have crude, again, of course, 95.75 is trading 23% implied volatility. Look at that, 23% implied volatility. Vol is starting just to come off just a bit now. Again, your OVX yesterday ended up closing the day around, I have it right here on my board here, let me find it. There it is, 24.35. This is what we closed and settled yesterday in OVX. So now, right now, I got really your implied volatility at 23%, vol index 22.75. So vol is starting to fall. That would be just in anticipation before the number, I think. I don't think it's so much of a bullish activity right now. Again, we're looking at the spreads giving us that kind of bullish sentiment. I don't really think these vols going to give us that bullish sentiment. Open interest 245,984. Once again, it's 245,984. As we just quickly look over at your heating oil, we're 281.76. We're actually just about a dollar and a penny and a half lower so far today, with volatility just about 26% or so. Again, so I think heating oil will be leading. Heating oil, RBOB and heating oil will be leading. Crude will be lagging today due to these numbers. Again, as remember, we just said distillates and gasoline, they got really nothing in terms of just their report last night. So again, we're looking at open interest 90,145 in the RBOB heating oil right now, ladies and gentlemen. Here we have 287.60s trading at the moment. Here we see just a little bit of a light offer in the market, down by about a penny here. Volatility is about 22%. Open interest 94,623. Again, that's actually very much lower from yesterday on both of those products, so it's very bullish for both of those products. That's why I think they'll be leading. Crude will be lagging. And let's just talk here last but not least about what's going to happen here in our session, again, with our high and low, and then basically we're going to wrap it up. One more time here, we have forecasts for your natural gas, for your crude oil numbers. Again, here are your forecasts from Platts here. I just got them out this morning here. Crude, they're looking for 1.9 to 2.1 million for crude. Gasoline, they're looking for 750,000 barrels. Heating oil, they're looking for 1 million barrel build. Again, the gasoline, that's the draw they're looking for. Everything else is build. So again, so they're looking for the build in the heating oil. So those are your numbers that we're looking out for tonight. Just 2 hours. And I just got those numbers just about a second ago, guys. We planted them on the board. These are according to Platts analysts. So again, we have those numbers. We have our open interest numbers. Levels from yesterday, ladies and gentlemen. Piece of cake here, ladies and gentlemen. I got those levels for you as well here, big time. Again, we're talking your high from yesterday, pitch session high. I have 96.26. Your low, 94.92. We closed and settled the day at 95.62. Ladies and gentlemen, so far this morning here, I've been watching and I have a daily pivot for you right here at 95.62. Once again, guys, that's 95.62. That daily pivot for you. We're looking at resistance above here. Of course, I have some resistance above at 96.28. Once again, it's 96.28. I have resistance for you here at. $96.94, your next level, and $98.28, your third level. Support down below, $94.94, $94.26. And 92.92. Again, pretty simple here, guys. Those are your levels here. So we're going to do a really extended prep tomorrow morning about natural gas for their inventory numbers. But that's really about it, ladies and gentlemen. I hope everybody has a wonderful day. Good trading to you all. I'll throw it back over to JJ. Again, that's really it. Again, we can either go either way here in this market, and we're going to be watching these numbers. And you have your forecast. You have your numbers from last night. Use those APIs as a leading indication on the DOE numbers today. So, again, trade smart. See you guys later.
Marty, thank you so much for being here today. Thank you so much for the great commentary. And as always, really appreciate you supporting what we started with here this morning on our charts. So always great to have you here. Thank you for braving the elements down there in the NYMEX Exchange. As I said earlier, guys, every morning, 7:30 a.m. Eastern Time, we open up our home office. Marty's in the NYMEX. I'm here in Los Angeles in front of my computer screens, providing you with a very unique approach, going from the screen to the floor with our daily morning prep. I'm looking at sideways trading ranges this morning. Marty's seeing much of the same. We've got a very big variable in that 10:30 inventory news coming out later on in the morning session. Be aware of that news coming out, and don't forget to buy those lows and sell those highs. Once again, I'm JJ at School of Trade. That was Marty at Traders Audio. From the entire team here at School of Trade, Traders Audio, thank you guys for listening. We'll catch you guys tomorrow morning, 7:30 a.m. Adios, amigos. Bye-bye for now.